Matt Kevin just crossed the line. Here's why I think he's wrong. What's up, everyone? Welcome back. Today we are talking about one of the hottest Tesla story on social media right now. Matt Kevin just released a video claiming that Tesla could separate Gigafactory Shanghai, merge with SpaceX, and that Elon Musk may actually be allowing Tesla's stock price to fall so SpaceX can eventually buy Tesla at a much cheaper valuation. Really? Now, that's a huge claim. Not just because it's controversial, but because millions of investors might hear it and think it's based on facts. So today, I'm going to break down exactly what Matt Kevin said, what the actual report is, and why I believe his conclusion goes far beyond the available evidence. Because in investing, there is a massive difference between news, analysis, and speculation. So now, let's get into it, guys. First of all, let's be fair. The original report did not came from Matt Kevin. It came from the Wall Street Journal. According to that report, Tesla has internally discussed different options for its China business, including a possible spin-off, separation, or sale if Tesla and SpaceX become more closely connected in the future. Then Elon Musk publicly responded and called the report fake news. Those two things actually happened. Yes, and we agree with that. So, up to this point, we are dealing with real news. And honestly, every investor should pay attention whenever major financial publications report something about Tesla. Are you agree with me or not? But this is exactly where I think Matt Kevin changes from reporting the news to building a theory. After explaining the report, Matt Kevin says Elon Musk could intentionally allow Tesla's stock price to fall so the SpaceX can eventually acquire Tesla more cheaply. Think about it, guys. Think about how serious that statement is. That is not a normal prediction. That suggests the CEO of one of the world's biggest public company is acting against shareholders for the benefit of another company. If you are going to make a claim that big, you need evidence that is just as big. So let's ask a few simple questions. Is there an SEC filing confirming such a plan? No. Has Tesla board announced a merger proposal? No. Has SpaceX officially offered to acquire Tesla? No. Do we have any public documents showing Elon is intentionally trying to push Tesla stock lower? Again, no. So now let's talk about something even more important. As the CEO of publicly traded company, Elon Musk has legal duties to Tesla and its shareholders. If a CEO were intentionally manipulate a company's stock price to benefit another company, that could expose the company and its executive to significantly regulatory scrutiny and shareholders lawsuit. That's exactly why mergers between public and private companies go through extensive legal reviews, board approvals, financial fairness options, and regulatory oversight. Really? You don't simply decide to crash a public company's value and buy it on the cheap. If something like that were ever happening, investors would expect to see concrete evidence, not just assumptions. And right now, that evidence simply is not public. So now, where I think Matt Kevin makes his biggest mistake. His argument is basically this. Elon Musk has denied stories before. Some of those stories later turned out to be partially true. Therefore, the story is probably true as well. But that's not how investing works, Kevin. Past events don't automatically prove future rumors. Every claim needs its own evidence. Imagine someone saying, I guess correctly 3 times. So my fourth guess must be also be correct. That's not investing. That's probably mixed with confidence. And confidence is not evidence. One thing I always tell investors is this: the market doesn't pay you for exciting stories. The market pay you for being right. Whenever you hear words like secret plan, hidden strategies, evil plan, it's a red flag, guys. Stop there. Take a step back and ask one simple question. Where is the evidence? Because exciting theories get views, but evidence builds wealth. Instead of getting distracted by theories, you know what I'm watching here? Tesla's vehicle deliveries. operating margins, AI investments, robotic expansion, energy storage growth, cash flow, capital spendings, and future earnings. Are you getting my point, guys? Those are measurables. Those are real. Those actually affect valuation. If Tesla's profitability changes, the stock reacts. If margin improves, the stock reacts. If free cash flow got strength, the stock react, guys. These are the facts that institutional models are built around, not social media conspiracy theories. Like whether Tesla eventually reconstruct part of its China business is definitely an important story. But today, nobody's outside Tesla leadership team knows exactly what will happen. Not me, not Matt Kevin, not anyone watching this video. And that's why professional investors separate confirmed facts from educated opinions. Overall, in the end, I just want to say I'm not saying Matt Kevin can't be right. Maybe part of his theory eventually happened. Market surprises all the time. But today, his biggest claim are still theory, not publicly proven fact. As investor, we should never confuse confidence with evidence. The next time someone tells you they have figured out the secret master plan behind Tesla, ask them one simple question. Where is the proof, guys? Where is the proof? Because in the stock market, evidence will always beat imagination. If you enjoy this analysis, hit the like button, subscribe to the channel, and tell me in the comments, do you agree with Matt Kevin's theory or do you think he's making assumptions that go too far? Thanks for watching, and I'll see you in the next one.